Welcome back, everyone, to another episode of Chip Stock Investor. I'm Nick Rossolillo, here to talk to you today about a company I'm really excited about, Synopsys, ticker symbol SNPS, a company I promised to do a deep dive on for a while, but the more I delve into the business and its various layers of complexity, the more intrigued I get. So I've been taking my time with it. I did recently make a small purchase, a starter position in this stock. So in this video, I'm going to talk about what Synopsys does, some of its customers, its financials, outlook for the next couple of years, and why, as much as I like the stock, as much as I like the business, I should say, why I started with just a few shares to get started. So here goes, Synopsys. Let me just begin with a high-level definition of what Synopsys is. So it is primarily a software business, but it's a software business that's also a play on the semiconductor market, which, if you've been following along with the show, you'll know that historically chips, chip design, chip manufacturing, all of it tends to be a very cyclical industry, like all manufacturing-based businesses are. You have periods where sales surge and then that surge kind of dies off, maybe declines. So you have the cyclical downturn, but it's growth cyclical. Chips continue to proliferate throughout the entire global economy. That trend in place, we believe, through at least the end of this decade. But Synopsys is a unique play, much more stable, consistent revenue, highly profitable, but you still get the growth from the semiconductor industry. So specifically, Synopsys is known as an electrical design automation, or EDA, software business. One of its key peers is a company called Cadence Design Systems, ticker symbol CDNS. That's another recent stock that I took a starter position in. We'll do a completely separate video on that one. And then a third software company called Mentor. That's actually now a subsidiary of the German industrial conglomerate Siemens, ticker symbol SIEGY. We were not going to touch on that, but basically those three companies, Synopsys, Cadence Design Systems, and Mentor, are almost an oligopoly on this EDA industry, electrical design automation. Think of it almost like an AutoCAD program, but instead of maybe for like a building or maybe a manufactured product, EDA is specifically for the semiconductor space. So CAD for chips. There's some other stuff going on here though too. Let's get into what makes Synopsys different from some of the other companies out there. So in addition to this electronic design automation software, Synopsys and also Cadence also provide licenses to patented chip designs. So maybe this sounds a little familiar to you. There's a very large company called ARM out there. That's the company that NVIDIA was trying to acquire a couple of years ago. And that's basically all of ARM's business. They have patents on chip designs that they can license out to a semiconductor company, like, for example, Apple. And think of it as like a basic template that a company like Apple could take and then customize the chip to their own specifications, or maybe use it as a basic building block as they maybe create a more complex system around it. So Synopsys and Cadence also offer an element similar to that in their business. They license out chip designs. There's two other things though that I think really sets Synopsys apart from everyone else. So the first thing is, in addition to EDA software and licensing, Synopsys is actually the leader in application security testing, or AppSec testing, which is another software as a service. But specifically, this allows companies, it could be a chip maker itself, it could be a company that works with chips. It works with hardware at the hardware level as they develop software, or it could be an end software company working on the final product to test for a software's security, to make sure there's no holes in the code. Also make sure that all the code is compliant, because a lot of software these days, it's not written at the code level, but it's sort of built using these modules that have already been developed and kind of piecing them together. So making sure that any licenses attached to those individual pieces are compliant. And then also making sure that the final product is going to work as intended, and making sure it's tightly integrated with the chips that are going to operate that software. So interestingly, Synopsys has actually been named the leader by Gartner. Maybe you've heard of the Gartner Magic Quadrant. For 4 years running, Gartner has named Synopsys the top player in AppSec, which I discovered this. In part, Synopsys had a special meeting back in October of 2022 about this, but also Palo Alto Networks, ticker symbol PANW, another stock that we've owned here for a number of years, actually got into this space as well. They recently acquired a company called Cider Security. But Synopsys is actually the leader in AppSec, has been for years. Reason number two, I think Synopsys is highly differentiated from other companies in this space, is they've talked a lot about in recent quarters that they are deeply involved with the development of 2 nanometer and 3 nanometer chip development. And Synopsys' CEO actually recently said that the majority of companies working on 2 nanometer and 3 nanometer manufacturing have exclusive deals with Synopsys to work on that technology. That's interesting and very notable. Now, there's not any specific numbers attached to this, but that seems to imply that Synopsys has a sort of monopoly on some of this business. Maybe it's coming from Taiwan Semiconductor, maybe it's Samsung, maybe it's Intel, maybe it's a combination of Samsung and Intel, or Taiwan Semi and Intel. We don't know, but Synopsys is deeply integrated with pushing the boundaries of chip manufacturing at the most basic of levels with this 2 nanometer and 3 nanometer technology. So if you're looking for a way to bet on companies like Taiwan Semi, like Intel, but some of the manufacturing aspect of those businesses makes you nervous, as it does me. We don't own Intel or Taiwan Semi at this point. I think Synopsys is a fantastic way to invest in both of those companies without taking on the risk of chip fab expansion and this sort of like chip fab arms race that's just starting to heat up between companies like Taiwan Semi, Intel, Samsung, and so on. So Synopsys, really, really intriguing play on this front here. Let me give you 2 more ways to kind of break down Synopsys's business. So the first is very simple, just taking a look at the company's financial statements for fiscal year 2022. That's the 12 months that concluded for Synopsys in October of last year, October 2022. So the company said that its time-based products were just shy of $3 billion for fiscal year 2022. Basically, that's subscription software. That's the software as a service model. That was about 59% of revenue. Upfront products, those are things like a one-time purchase of a license. It might be software, it might be some sort of chip design out of the box and ready to go for a company to tweak to its own specifications and needs. That revenue was just over 1.2 billion, or about 24% of revenue. And then everything left over, $861 million, that was maintenance and service, ongoing maintenance and service. So we've got a nice little pie chart here to help illustrate that. That's one way to look at the revenue breakdown for Synopsys. The second way is a little bit more broad-based. You have to dig into the company's quarterly earnings conference calls to get this information. So this pie chart is broken down into semiconductor and system design revenue which was $4.6 billion last year in fiscal year 2022. That could be software, licenses on chip designs, et cetera, $4.6 billion. And then the other $466 million was software integrity. So that's what I was talking about before, application security and testing, and all the various services that go into that. So roughly 91% of the business, specifically semiconductor and design revenue. And then the other 9% or so last year was that software integrity and application security revenue. So again, this is a really interesting business. You get the growth from the semiconductor space, but in a software package. So you get nice, stable, recurring revenues over time, far less cyclicality than an actual chip designer or chip manufacturer, because regardless of where you're at in the semiconductor cycle, you have to continue developing and integrating new chips and software. Those chips are designed to operate. Okay, switching over to the ticker terminal here, I just wanted to show you what that consistency looks like for Synopsys. So you can see here their last 12 months, the period ended in October 2022, about 21% year-over-year growth. It's nice consistent growth here. You can see some of the slowdown in 2020 because of the early pandemic. Also in 2019, a lot of that had to do with the trade war between the US and China. But at any rate, consistent growth over time, really consistent gross margins for Synopsys. And one of the really nice things about this company, operating margins. The company has had a goal of steadily increasing its operating profit margin the last few years. That actually should continue. So if you can compare Synopsys with Cadence Design Systems, Cadence Design operating margins well over 30%. Synopsys has a lot of work they can continue to do to increase those margins in the coming years. That is still a stated goal of theirs. So I think we'll get consistent growth and operating margin expansion in the coming years if the company can achieve its goals in that department. And what does that translate to as far as net income? Even greater net income, because this is a software business. Every additional dollar of revenue funnels right to the bottom line. So great net income growth. And if we move over to the cash flow statement, you can see free cash flow. Similar story here. Free cash flow margins are actually already quite high. So they've increased it to over 30% here in the last couple of years. That should continue. And the company uses a lot of that free cash flow to repurchase stock. So you can see that right here in this line. They actually bumped up their stock repurchases in fiscal 2022 by a nice almost 50% increase year over year. So bear market hits, takes out a lot of tech companies. Synopsys boosts its repurchase of common stock up to almost $1.3 billion. So these stock repurchases should also continue because the company is so free cash flow positive, and provide a boost to earnings per share and free cash flow per share over time. Switching over to the balance sheet here, I think this is another nice differentiating factor for Synopsys versus Cadence Design. You can see here at the end of October, total cash and short-term investments, almost $1.6 billion. And going down here to liabilities, basically no long-term debt, $20.8 million, almost $1.6 billion, only $20.8 million, basically a squeaky clean balance sheet, tons of cash that Synopsys can use to make acquisitions. They frequently go out and make smaller acquisitions of tiny software peers or startups to strengthen their own ecosystem. So lots of cash for them to do that, or to continue repurchasing stock. And along the way, those really robust free cash flow margins will continue to replenish the cash on balance. We do need to talk about potential risks for Synopsys, and I have three of them picked out. I'm going to start with the first one. You could view this as a risk, or it could actually be a big opportunity. And it actually specifically relates to Intel. So in its financial filings, Synopsys divulges that one customer represents 13%, basically, let's say low to mid-teens percentage of its total overall revenue. And that's probably Intel. So having revenue concentration with one customer is a potential risk. If things continue to go south at Intel, this could be a drag on Synopsys. But also, if Intel kind of gets things back in order and returns to growth, this could also be a potential opportunity. The second risk I see here, a lot of companies, including big tech giants, we did a video on that last week, continue to develop their own chip systems, chip design systems, integration systems. That could also be a potential risk for Synopsys. Even NVIDIA, Jose Najarro talked about this on his Semiconductor Investing and More podcast. NVIDIA said that they're using their own AI system to help optimize chip design at the transistor level. So at the most basic layers of chip design, and then eventual software coding and integration with that. I see risk here as a lot of these big tech companies look for ways to more tightly integrate what they're doing, look for ways to expand and save money. That's another risk for Synopsys. And risk number three, I think this is actually the biggest risk of the three, is simply just valuation. So as I record this, Synopsys trades for almost 53 times trailing 12-month earnings. That's a GAAP, unadjusted earnings, almost 53 times. On a free cash flow basis, it looks much more reasonable, just shy of 33 times free cash flow. But it's worth calling out because even after a bear market, and Synopsys continuing to grow over the last year during this bear market, shares still trade for a pretty hefty premium. Now, Synopsys does see growing revenue about 14 to 15% in fiscal year 2023. Nice boost to free cash flow and earnings along the way. So if you're looking out over a 1 year plus basis, and also assume some operating margin expansion as well, I think the valuation gets a bit more reasonable, but that's on future expectations. So basically what I'm saying here is because of that high valuation right now, this is probably going to be a pretty volatile stock. That's why I made a very small initial purchase of Synopsys. And I'll use a dollar cost averaging system and purchase a couple shares every month over time as I slowly build this up into a larger position. Quick recap here on Synopsys. This company is really intriguing. You get all the growth of the semiconductor industry, also some cloud computing and cybersecurity exposure as well. I think this company grows in a low to mid-teens percentage over time, but thanks to operating profit margin expansion, even more growth in free cash flow and earnings per share. Make sure you hit the subscribe button, hit the bell below, have more videos coming up on Synopsys's very important peer, Cadence Design Systems, another stock we recently added to the chip stock investor portfolio. Also a video on the recent weakness in the US dollar and why that could be a huge tailwind for stocks in 2023. See you all next time here on Chip Stock Investor.